So how concerned should people be about their 401k right now?
If they have positioned themselves with a broad asset allocation, and if they've got years to go before retirement, this is not a big deal for them. In fact, they should be joyous that they're able to buy today at less than they were able to buy at a month ago. Market dips allow them, with consistent investments, to actually have an advantage over a market that would just steadily increase. And we all know that the market isn't a straight line increase. They always draw those curving marks. We have expansions and contractions. The pullback, we don't know what's going to cause it time over time. It can be anything, even the black swan events. But we know there's going to be a black swan. We just don't know what that black swan is going to look like. And so there's always something that causes markets to retract because the present value of all future cash flows is impacted by everything from consumer sentiment to tariffs to geopolitical affairs to just how people feel about investing their money. And so it's going to be a bit volatile, but we don't care so much where the price is right now today. And in fact, if we're a buyer, we're happy to have a lower price. For many of us, we care about what will that price be when we get to retirement. And for those who still have 10, 15, 20 years to go, it's not an event at all. For those who are on the doorstep of retirement, however, for those who are planning to retire this year, next year or so, they may see these market pullbacks as a threat to their nest egg if they become too aggressively invested in the markets. However, again, for those who are properly allocated for where they are in the world of investing and where they are in their life, this is a non-event.
What about people that are about to retire, planning to retire soon? What should they do, if anything?
For those who are about to retire, I can remember in 2008 when the market dropped not just 10 and 15%, but the market was off 50%. At a 50% drop, we had people like Jay Leno saying their 401ks became 201ks. And while that was kind of funny, it was truly the way some people felt as they were entering retirement. And we had news story after news story where a person said, I was going to retire this year, but I had to postpone my retirement because I don't have as much as I thought I was going to have. I now don't have enough going into retirement. Hopefully, a person before getting to retirement has allocated their assets in such a way that the long-term money, the money they may need in 20 years, 30 years, when they're 80, 85, and 90, that's okay to be long-term market invested. But the money they need next month to meet living expenses, that should already be very visible in a safer account. So for many people, as they reach retirement, it may be the first time in their lives where they've had to striate their investments. From the money I need right now to meet immediate expenses to the money that's going to throw off income for the next 2 to 10 years. And then that money, which is really longer term money, which has the ability to ride the ups and downs of the market.
Taking out a loan on your 401k, good idea. Or what about withdrawing from it?
A 401k loan can offer an opportunity to borrow the money at low rates and the interest you're actually paying back into your own account. However, borrowing to sustain a lifestyle that is not long-term sustainable without future loans is not a good use. And you certainly don't want to borrow to pay off debt that might be dischargeable in a bankruptcy if you're going down that path. So should you borrow or not? It depends. But for those who are going to pay the loan off, who are looking for an easy, low-cost interest, and it does remove that money from the market, so you do remove some of the upside potential of those dollars, but then you also reduce some of the downside potential of those dollars. A 401k loan may be okay.
If you do have the money to buy right now, what would you suggest buying?
We've all heard of people saying they lost all their money in the stock market, but nobody has ever lost all their money investing in the S&P 500 index or the Dow Jones Industrial Average or the NASDAQ Composite. The index has never gone all the way to zero. You had the rough rides where the market drops 20, 30, 40, 50%. And yes, as bad as it is now, it's not as bad as it can get. But those who lose are those who continue to sell low and buy high. We don't want to be that person. And if you're a buyer, we're at a 15% discount. That's exciting. I've had people ask, is this a good time to invest? And I'll go back to that. Wait till you see the whites in their eyes before you pull those triggers. There may be a bigger discount coming, but nobody knows. It is on sale to what it was a month ago.